This will be the third video that I have done on Snowball Capital, and it's going to be with Taylor this time. And in essence, what I'm asking him is, as a hedge fund, how do they distinguish a 2x stock from a 50x stock so that they can get the kind of returns they need to be successful as a hedge fund? I think these are the three videos I made are three of the most informative and valuable videos that I've made in the last year and a half, because it gives us a direct insight into how hedge funds work. And we've got to recognize that they are becoming the best of traders. I want you to pick up on something he says, how Goldman Sachs can't buy many of the stocks that they buy for their clients because they're small. And if Goldman Sachs went and made a recommendation on them, they would, in essence, end up owning all the shares, because their clients, their subscribers, would flood to that stock and eat up all the shares, and Goldman Sachs would, in essence, own all the shares, or their clients own all the shares that are out. So you will find, as he tells me, we play in a whole different field than the retail investors do, because we go after those stocks that are going to give us a 50x return. I want to, at this point, thank you. I could not have had these interviews if it hadn't been for you. If it hadn't been for the power of the tribe. The tribe is the 148,000 subscribers that I have, that as a result opened the doors that allow me to get information and then to share that information with you. And the power of the tribe is in this book. This is the latest book that I've written with the assistance of one of my tribe members, Colin. And so I want you to, there's a link to it in the description. If you want to know what this whole movement is about, the best of us investors, read this book and become a member of the tribe. How do you do that? Sign up at bestofusinvestors.com and go there and you'll see it. So let's get into this video where I ask Taylor exactly, how do you distinguish a 2x stock from a 50x stock? I think this is extremely valuable. And listen to some of the nuggets that he drops, and I will dissect this video and the other two videos in the coming weeks to give you some direction of where I'm going and what I'm going to sell and what I'm going to buy based on the information that I've picked up from these. Okay, watch this.
Best of Us Investors presents Carrie Griegmeyer.
Okay, Taylor, the backbone of your business is, you said you don't own the Teslas, the Apples, the Amazons. The backbone of your business is to distinguish a 2x company from a 50x company. How do you do that? And not how do you do it? How can I do it? How can they do it?
Not through money managers, that's for sure.
Wait a second, not through money managers.
I mean,
whoa!
I think we're a little different, and we're fund managers. But if you want to go to your local broker and ask them to put you in a diversified fund, and they're going to buy you ETFs and maybe some Apple. Oh, but there's too much exposure to technology there, so we can't have that creep above 30%. I mean, what company isn't a tech stock these days, right? So they have all these criteria. But so I think a lot of people, maybe they discovered this during the pandemic or whatever. Also, people are retiring and living for much longer, so we've noticed that as well. But retail investors are actually doing great research themselves. And I think people can do it at home. There's a reason that we're a young company, young people, and managing money, right? It's stuff that you can do yourself if you are targeting that kind of 50x growth. Obviously, that's much higher risk. But if you want just traditionally to, you might as well just buy gold or just buy, here's something. What in the past there would be these the safe investments, and that may be ExxonMobil or Kodak or Walmart, So, but these days I ask you, what is a safe investment? What company?
What company? I would say my big six, and that would be Apple, Google, Amazon, Facebook, and IBM. What Amy Webb said are the big data companies.
And 5 years ago, or even still today, most people traditionally in this space, in this industry of finance, would say, no way, you can't. Those are tech companies. Those are so speculative, right? And I mean, some of these companies were very recently not profitable, right?
No.
So how is it that people, if you are talking about profitability, if you're talking about valuation relative to other comps, peers in the space, things are no longer trading the way that they are supposed to or used to, right? So if you're looking for the 2X company, then maybe that's going to be, and unfortunately sometimes it is a company like Alphabet or a company like Apple. If you want to double your money in the next 5 years, Alphabet, Amazon, probably maybe 3X, 4X. But if you're looking for the companies, and definitely you do need a lot of structure, and you need to have that as well. You need to have some of those safer bets. But it's funny that the safer bets these days are, ironically, what they would be thought of as very speculative just a few short years ago.
Yes.
So if you're looking really for the 50X companies, you do need to do your own research. It's not going to be out there in front of you. And you have to, something that we do a lot is you read through earnings calls transcripts, or you can also listen to a lot of them. And you can see deflection. We have software that does this using artificial intelligence. You can see deflection. You can see sentiment on an earnings call. Sometimes there's so many earnings calls on the same night that we can't listen to all of them at the same time, but we do need to know what happened, right? So we use it for that, but also just to see, I think that was a good call. Or, I don't know, I don't like how the CFO responded to that question. So that kind of stuff, if you're just good judge of character, you can sniff that stuff out as well. And if they're dodging on a question that is very fundamental, why is that? Are they trying not to say that maybe they have a product in the pipeline? These are things that you're not going to be able to read in Bloomberg. You're not going to be able to read this stuff. Even reading transcripts can be difficult. I think you do need to, it's better if you just hear it live, right?
Yeah.
So earnings call transcripts and earnings calls in general are a very good way. Also, their presentations. Don't print, but maybe on your iPad, download the entire annual report from any company that you're thinking of. And you may find, and sometimes the fine print, that they're the seatbelt supplier of this company. It's a very well-known seatbelt supplier, and but I don't see that seatbelt supplier in another company or an airbag company. I'm not saying buy the seatbelt company. I'm saying know that this is not what you want the highest quality in that car's products. So something that we actually look into even are what types of robots are in factories. And you can find these videos on YouTube, right? You can see, they're using a Fanuc robot and a KUKA robot. They're very expensive, but they're very precise versus another company that's maybe using an ABB robot. And that's not, so you don't have to be an expert in that stuff, but you can see, again, like we said in the previous video, rates of automation are really important metric for us. Financially, even things that you can see on Yahoo Finance, you could pull a lot of this data out. That is very fundamental, but if something that we look a lot at is research and development. So the research and development spend as a percentage of revenue. It's very simple. You can calculate it on a napkin.
Right. Okay.
And if we see that revenue is growing at, let's say, 40% annually, and the revenue spend is also going up, so they're spending more on revenue, but it's not proportionate to how much the revenue is growing, then why aren't they? That should be number one. Your R&D spend, if you are a company and you're looking to have a 50x, you're looking for a 50x company, R&D spend is key, right?
Okay.
If Apple has a $20 billion R&D budget, and there are companies that they could acquire for that much, right? Then you have to start looking that way. So
wait a second. So you're saying if Apple's got a budget, you're maybe discounting the company because you fear that Apple is going to duplicate them and compete with
You have to think about that, certainly. So if we were just talking about telemedicine, right?
Right.
So a company like Teladoc, that if Apple spends that much, what Teladoc's valued at right now, similarly, Teladoc's a little higher. But granted, this is for all of Apple's R&D. But let's say that Apple somehow broke down, their R&D spend, or you can typically get a good sense of where they're spending. Then that's typically an indicator that you should be out of the stock, or maybe it's complementary. So that statistic alone, that metric, the R&D spend, is really important, I think. And that's something that you want to see really high R&D spend. Not too high, though. I mean, you don't want them to just be throwing money and building a brand new headquarters every 5 years, right? So you have to be definitely, companies should be disciplined in that.
You also mentioned to me off camera that you like companies where the founder is actively involved in the company.
Founder-led. We even look at the average age of the board of directors. You can find that in the annual report.
Expand on that.
Well, if you are a company like Tesla, and the average age, I don't know off the top of my head, but let's say it's 48 years old, versus General Motors, where the average age is 72 years old. You tell me who's going to be leading the future, right?
Okay.
And it's not just about age, of course, right? But typically, if you want to have the leading people in the industry running the companies, if the CTO of a company is a 75-year-old person who was working, if we're talking about a company like Tesla or GM, right? Would you rather have the CTO, the Chief Technology Officer, be someone who was working for GM for forever, or they were at Boeing and then they came, and they're good at running a company, but just the technology part of it? Or would you rather have someone who is one of the leading data scientists in the world, or one of the leading artificial intelligence researchers, and you poach them from Carnegie Mellon versus another big auto company? Okay. There's a difference in this. So again, if you're trying to find a company that is a 50Xer, then it's not going to be led by older people. And it also, sometimes, I know this sounds crazy, but if a company isn't even eyeing being profitable, especially a newer company, like we were just talking about 23andMe, or Didi Chuxing that's going to go public very soon, the Uber of China, except significantly larger. Both of those companies, when asked about when they eye being profitable, they say that's not in our plan right now. We do not.
And you're okay with that?
I'm okay with that. That's in fact, that's better, because how long was it that Uber was losing money on every single ride? Same thing with Tesla. Tesla was losing money on every single car.
Or Amazon.
Just a few quarters
14
ago, right?
years.
Right. So that you have to make some sacrifices as a company to really get into that sweet spot of that hockey stick curve of growth. And you're not going to do that by trying to appease, even pushing back an IPO the longer and longer. Sometimes that's actually very attractive, because even though we would like to, we're gnawing at the bit for it, it makes sense for the direction of the company. So that's why probably on our entire watch list of companies, it's over, it's in the hundreds. I'd say probably 30 to 40% of those companies are private companies, and some of them are really small. And so sometimes understanding the tiny companies, that can, if they eventually grow into the larger companies, obviously that's great. But also some of these companies, they do merge and they're acquired, but we don't play that game. And that's just a kind of dangerous game to play, to be honest. But more importantly, if you can understand that, all right, there are 3 companies that are trying to make LiDAR, for example, the thing for autonomous vehicles spins around. Right. It doesn't anymore. And there are 3 companies, and they're all similarly funded, but 2 of them are led by former Alphabet employees, and they've been at this for a while. And then one of them is led by a young, ambitious person who didn't go to college because he didn't want to, fall into the trap that he wouldn't learn anything that he couldn't already figure out himself, right? There's a difference in those companies. And right now, one of those companies is, guess who, right? Is leading. So, and you can
mention
see that.
The name.
Well, I was actually just giving an example, but that one happens to be Luminar, right? Ticker Laser, LAZR. But so in that kind of space, it's a nascent space, right? We don't know much about it. It's hard to research that kind of thing. So how do you do your own research? Well, sometimes you can look at who's leading the round in these funding. You can see the stuff on Crunchbase.com. You can see this. It's
On what?
Crunchbase.
Crunchbase?
Yeah, for private funding rounds. You
Okay.
can typically see a lot of this for free, even.
Okay.
You can read about it, some of it, but you do definitely have to do your own research.
Okay.
And I wouldn't trust a lot of the research on anyone. That's why no one really says this is going to be a 20xer, 50xer. You only find that stuff on YouTube because no one's confident right now enough to say in really the business space that yes, we are confident that this company will achieve a $4 trillion market cap in the next 3 years. No one's saying that.
Let me ask you this, because this is something I'm trying to do. I'm trying to get myself in a position where I can go and interview people, much as I'm doing here. And last week I interviewed the CEO of Desktop Metals and learned a lot from him. Do you do that? Do you call up a company and you're lucky, you're in a community that it seems like every other building has a new and growing company. Do you find them receptive?
Yeah. So here's why we're moving to China, because we were spending so much time.
Your people are moving with you?
We're moving our entire company to China.
Okay.
Yeah. Not forever, but for at least 2 or 3 years.
Wow.
And because if a significant amount of our holdings or even the technologies are in China, then we have to be there. We have to meet with these companies. And it just makes more sense to actually move there. And because if you don't experience it, if you just read about how this one app is a Swiss Army knife of all apps and you don't even understand, it's like Uber and Facebook and and YouTube and Twitter all in one app, but you don't actually use it every day. And then you can also pay for groceries with it. You can order medications through it. Yeah, you can read about it, but until you really understand how that impacts people's lives and how many people are using it,
Okay.
it's different, right? So, but in terms of actually reaching out to companies, yes, companies typically are more receptive to people in our industry, but there are companies that are toying with being more, especially on earnings calls, taking more retail analyst questions. And
Okay.
there are even companies that take questions from these YouTube financial analysts.
Mm-hmm.
And that's the retail community is growing significantly, especially as it's so much easier for a lot of people to invest. They don't have to pick up the phone, even they can just do it on their app. So that's growing, of course. But yeah, if you want to reach out to some of these companies, some of them give tours, and you
Okay.
can most certainly, if you want to have make a whole trip out of it, you could hit a bunch of companies in a certain area, go to Silicon Valley and you can take your family and then just go and visit some of these companies. They're typically, the bigger they are, the less receptive they're going to be.
Yeah.
But yeah, it's definitely when you get to talk to, especially these founder-led companies, that's just another level. That is something that it's still founder-led. If it were like Tesla, it's not a founder-led company, of course, right?
Mm-hmm.
So, but Elon Musk still has that vision. There are exceptions. Same thing with Apple, as we talked about.
Yeah, Tim Cook.
Tim Cook, he's still, I would almost consider that a vision.
I would agree.
Or a founder-led company. But if you have some of these other companies like Ford, where they have to keep getting CEOs just on rotation.
Yeah.
I mean, you really think they're going to innovate a lot? Probably not. So, yeah, understanding the management of some of these companies is key. If you can talk to them, that's great. You can also just use their products. The more you use their products, obviously, you learn a lot about it. That's a Buffett rule. So,
Yeah.
I think that the research is so dynamic these days, and it's so accessible. That's the other thing. You can just, and just 15 years ago, how would you look up the financials of any of these companies, right? You would, if you're not familiar with the space, it's very difficult to do that.
I subscribe to Seeking Alpha, and like you said, I'm not invited to the earnings call, but they do have them recorded many times. I actually, you and I both being dyslexic, I can't read through a quarterly report, so what I do is copy it out of Seeking Alpha, then move it over to my Word and put it on audio, and the computer reads it to me. I don't get the inflections in the voice, but it makes it, you just get a different feel for what the company is all about. And I think there's some real virtue in that. And I would challenge some of you who live in cities and there is a company that you're interested in, call them up. Ask them for a tour or ask them to to meet the CEO and tell them you're interested in investing in them. And it's like when I was in the dating world, I realized the worst thing they can say is no, and I got plenty of those.
Well, I would say do your research like crazy on the company. Because they don't really want to give a tour of someone like it's a brewery, and they're like, oh, that's how the hops are used, right? If you can wow the founders of these companies, or even just the investor relations teams, or even the PR teams at a lot of these companies, they're quite receptive, and you can just say, I already know all about that product. You don't have to explain it to me. That's, especially for the founders, that's their baby, and they love that someone else is sharing in that with them.
Okay.
And so if you do your research like crazy on a company, then you can go visit it, then I do warn you that you can fall in love with a company a little too much sometimes, and that's dangerous for sure.
Yeah.
You need to have an exit strategy, but most certainly you can learn so much more from, and there are videos on YouTube that you can find of a lot of these companies. They're all stepping up their PR and IR efforts. And by the way, I don't know of any company that you can't listen to their earnings call live. Now, you may not be able to get the dial-in for that, to actually ask, press pound zero, and then you can ask the question. Okay. But you can listen to them live. They're webcasts.
Okay.
You just do it through your computer, so you can't do it through your phone.
All right.
Yeah.
Well, that's very, very interesting. In my portfolio, I basically allocate 60% to the big six, and then about 40% to those companies. And in specific, I am directed towards EV, robotics, and biotech. And I basically operate on the premise that I'm going to have a 50X in there, and I'm going to have some minus X's in there too. But I've got to go after these young companies that aren't making money and that are spending money on research and that want to be a part of the future. Again, I think it was, who was the Magellan Fund manager who said, I want to invest in companies who are going to change the way I live. And that to me is the essence of investing. If you're going to invest in the companies that are just going to keep you where you are, as you said, you might get a 2X in 5 years.
Right.
But, okay.
And also geographic breakdown. Make a pie chart, even on a napkin, of where your holdings are. And if that pie chart is almost entirely or is everything in American companies, diversify, right?
That's another issue that I have fought, and I've only come past it recently, and that is I refused to invest in Chinese companies because I remember seeing videos where they had mining companies that they did put out their annual reports, but then when an investigator went, they found that there was nothing there, that there were factories, that there was nothing there. You're apparently getting past that in that you're going to move your company there so that you know.
That country's changed a lot, yeah. And it doesn't have to be just in Chinese companies, but now these companies, they weren't even putting their annual reports out in English. Now they are. Okay. They weren't, they didn't even have some of these, but if you want to talk about transparency, the transparency in these Chinese companies, some in particular, is crazy. For example, BYD has an investor hotline, granted this one's in Mandarin, that during the trading hours you can call and ask them any question they want, and they'll publish the transcripts of that call. Oh. And so talk about real retail reception. Anyone can do that. Every single meeting that they have with outsiders, in terms of investors, they record down to the exact time the meeting started, and they release this every single quarter, which, by the way, they don't even have to release quarterly. They can release semi-annually. They choose for further transparency. And they're not the only company. A lot of companies do this now. But they break it down to what conference room they were in and the minutes of that meeting. So I think it's because they're going a step beyond, because they know what the rest of the world thinks of these Chinese companies and how it's going to be the next Luckin coffee, or it's going to be, right?
Oh, yeah.
So, there definitely are some bad eggs out there, which is another reason why you have to do your own research. It's really important to do that. And I find it more exciting to do research on companies that aren't in the United States, because everyone knows the companies in the United States typically, and they're kind of already tapped, right? The difference between the 50Xers and the 100Xers, that's probably by country. And honestly, 100Xers don't exist right now.
Okay.
So that's the sad truth of it. But when they do, people need to be ready. And I'll tell you what, the big banks of the world, they're not looking for that, because those companies are too small. If they if they had any kind of research on a lot of these tiny companies, then every single person in all their clients would buy the stock, and then they would own the thing. So they can't, right? So that's why they can only go after the big ones.
Okay.
So yeah, doing your own research, it pays off a lot.
Okay. Well, that gives you some guidance of how it's done by the big guys, the big money. That's what we refer to you people as, the big money. And us small money people need to adapt some of their tactics. And again, I believe that you should explore your city. See if there's something there that you can gain access to, even if it's just driving that by and familiarizing yourself with it. And then, like we're talking about, find their quarterly report and listen to it and become knowledgeable. That's what will separate you from being an average investor and actually making a living, if that's what you choose, or enhancing your retirement. And our goal as Best of Us investors is to make good investment decisions. Something else I believe very strongly in is keep more of what you make. Learn our tax code. There are some people who keep much more than most. And then take advantage of what our country offers us, and that is to pass $24 million on to our heirs, estate tax free. That's per couple. And if they offer it, why don't you take it? Work to accumulate $24 million. Make that your goal. Put it on your bathroom mirror, and it'll probably happen. Okay, thanks. Thank you so much.
Yeah,
all right, and thank you guys. That's the rest of the crew.